You're listening to Go with Jamarlin Martin. We have a go hard or go home approach as we talk to the leading tech leaders, politicians, and influencers. Let's go. Today we have Isa Watson, the founder and CEO of Squad by Envested. Welcome to the show.
Thank you for having me.
Let's talk a little bit about the platform that you're building. Can you talk about, what problem are you solving?
Squad is a social community platform, and the problem that we're solving is the fact that people have a hard time cultivating community in the different aspects of their life, right? So there's a community that they're trying to form at work. There's community in their fitness, environments. There's community in their apartment buildings, whatever the case is. And so with Squad by Envested, we actually started in the workplace as a workplace community engagement platform where people could, at the community level, that's essentially the whole workplace, but you have groups of people based on interest. So you can have like your new moms group, your marketing group, your book club group, etc. And those are called squads. And what the platform is a central repository for all events and activities going on amongst those groups and in the community at large. And what we found was that when we were in the workplace, working with companies like Walmart.com and Jet and Vivo and companies like that, we found that the user actually was very interested in not necessarily having their work community as a completely separate entity, but in having their work community consolidated with all the other things that they were interested in. And so with Squad by Envested, you're able to join multiple communities from your work community, like I said, to other communities that you're a part of, but having a central repository for all events and activities and things going on in your community. So when we talk about our value proposition, it's really about bringing online communities offline at scale. And as a digital native and a millennial, we know that that's something that we don't necessarily do as well, being able to kind of cultivate in-person opportunities.
Let's talk about your academic background. It seems like, you got like 10 degrees and different subjects, but can you talk a little bit about your background?
Yeah, sure. So I started my career as a chemist. I was always a STEM kid. I love like complex problem solving. I love putting things together and making sense of, smaller intricacies. And so that manifested itself in me wanting to study chemistry. At one point, I thought I was going to be kind of the top researcher in some type of oncology, and that was my goal. And so I studied chemistry, went to Hampton University, and then I was a diabetes chemist at Pfizer. So I was really interested in that area because there's a lot of, instances of diabetes in my family. And then I was a clinical data scientist for the drug Lyrica, also at Pfizer. Did my master's in pharmacology along the way. And one of the things that, my transition from science to non-science was interesting. I was really interested in expanding my skill set. As a scientist, you're really, really in the lab, focused on this one thing for an extended period of time. And I really wanted to broaden my skill set and understand not just how science can be created, but how science can impact the world. And so I said, I'm gonna go to business school. So I went to MIT, where I got my MBA and focused on econ and finance. And I thought I was gonna go back into business development for pharmaceutical companies. But interestingly, I had a lot of opportunities that were, thrown at me when I was in business school and when I was in the recruiting process, and ended up landing in a completely different place than where I thought I would be. And that was on Wall Street. So I went to JP Morgan Chase, where I was working for the senior leadership team and this kind of leadership training program that Jamie Dimon had created, called the Management Associate Program. And essentially I was actually kind of launching and building a number of strategic initiatives across different parts of the firm. And so before leaving to found Squad, that was kind of my career path. And, the catalyst to me leaving JP Morgan to found Squad was really on, understanding and first of all, seeing such a great scope of things and divisions at the company. JP Morgan is a 250,000 person company, but also actually seeing, the divisions where, community was the strongest and understanding the impact that had to the ROI of the business. And so kind of having those nuances gave me the conviction that this was a problem that could be solved through technology at a much larger scale.
Folks are starting to rethink the value of getting an MBA, getting a master's, even going to college.
Yeah.
As you know, there's a massive debt overhang on students and the economy. How would you rethink? Investors, corporate America, they want to see the MIT, they want to see the MBA, but to do what you're doing now, maybe it's not worth the trade-off in terms of the debt.
I have kind of almost two conflicting perspectives on it, right? So I'm of the school of thought that experience actually matters more than the titles per se. And I think that, that's why I'm a huge fan of a lot of these high school seniors taking gap years, because I think that, a lot of kids come out of college at 21, 22, and it's actually very hard to transition them to the real world sometimes because they actually don't necessarily have meaningful skills. And they haven't spent time working and building things. And so I find that, that's kind of one school of thought. But on the flip side, as a person of color, I would be lying to you if I told you that having degrees from like MIT and Cornell and Hampton and having like hard technical degrees didn't help me get to where I am. And it's a huge point of validation. And I think that the more kind of minority boxes that you check, I'm Black and I'm a female, or let's say I was also LGBT, I feel like the more you need some of that kind of on paper credibility, because that's sometimes what gets you access into the room.
It seems like the way they think about it, particularly with Black professionals, they don't see a lot of us, right? Across the table or coming in to pitch. And if you have gone to one of their clubby schools like a Stanford or MIT, the way the investor thinks about it is, hey, it de-risk my time and possibly my money with the credentials. What was your thought process in deciding to go to Hampton?
So there are two parts to that. One, I come from a big Hampton family. So my father immigrated to the United States to study engineering at Hampton back in the 70s. So he was recruited from the West Indies, the islands, to, be a part of the drumline. And so I have 5 siblings, so 6 kids in total. 4 of us have degrees from Hampton.
Okay,
so
it's a Hampton family. You guys are banging Hampton across the board.
It's a Hampton family for sure. But I would say the second part of that, actually, though, Jamarlin, is the fact that I grew up in a predominantly white neighborhood and area. So I spent middle and high school in a place called Chapel Hill, North Carolina. So kind of your liberal, upper middle class, educated white folk. And I felt like growing up in that environment, my schools were great, but I also felt like, developmentally, I was not necessarily confused, but I wasn't just in tune with like what it meant to be a Black woman in America.
Yeah.
Right. And I just felt like I needed to kind of tap into that and to kind of better understand myself. And to do that, I wanted to focus my education in my next 4 years and being in a safe environment where like I didn't have all the other stuff.
Yeah.
I was just really around a ton of people that looked like me, that would allow me to just focus on my academics and figuring out who I was in this world. And so my experience at an HBCU was super foundational to me and my success.
Yeah. As you know, there's a lot of talk about diversity numbers in big tech with Google and Facebook, venture capital investing. And so, a lot of folks are like, oh my gosh, Mark Zuckerberg, Google, Salesforce, it's their fault. They need to be doing more.
Right.
Okay, we get that. Like that's the popular point of view, that it's their fault. So when I read about your background, I read about you starting to play with computers at 7, learn about computing at 7. Your father bought the components of a computer, and he wanted you to build it. Mm-hmm. I want you to talk about, hey, we get that Google, Facebook, Snapchat, Salesforce, Amazon, they could be doing better in terms of recruiting and making things fairer. But how much is it on the culture? Just basics, parenting and culture and what we prioritize. And it's not all external. we're going to have to be doing things on our side. You can't put this all on Google or Facebook's lap.
No, it's definitely a sensitive subject. I will be the first to admit I was really fortunate to have, parents that were very strict academically and with experiences. And I think that what you're speaking about is exposure. Like what is the exposure that we should give our kids in our community? And so I do think that education, we talk about it in the context of school, but education actually starts at home. And I think that I always joke, about this because my mom was a stay-at-home mom, and for most of my childhood at least, and I had to come home, finish my homework for school, and then do homework that my mom would assign me, and it was actually much harder than the homework at school. And so I do think that, communities of color, and especially Black people, we should take an elevated and more direct approach to kind of creating opportunities for increased exposure within our homes, right?
Yeah.
Especially as it pertains to STEM. But I would also say the harsh reality is that, my dad was an engineer, right? There are 2% of, PhDs in the biological sciences and chemistry are Black. And so when you think about, us having that opportunity and us just kind of playing catch up in some of those regards, people may not necessarily have the opportunities for exposure. And there's households like I did in mine. And so I do kind of recognize that privilege to an extent, but I would love to see, progress in, STEM and academic enrichment being, more of a focus in the homes of the kids instead of, as many video games and TV shows.
You would say it's fair to say that the popular opinions and views from activists and folks who are actually doing stuff, there's not enough of us talking about how do we remix the culture ourselves. You think that's fair?
Yeah, I think we should do that more.
What does this quote mean to you from Pablo Picasso? The meaning of life is to find your gift. The purpose of life is to give it away. I read that you thought about that before you made a transition in your professional life.
Yeah, so this was before I made a transition from corporate America, where I was, working all sorts of hours for someone else and for someone else's, goals and ideas, to becoming an entrepreneur where I wanted to have, impact at a much, much greater level than I would have been able to do within a large corporation. And so it was just a quote that, I used to hear my dad say, right? And so I think that within each of us, there are a certain number of gifts that we've been given, right? And I think that, we have opportunities to nourish those gifts. And for me, I think it was a combination of like STEM and analytics and a splash of being an inspirational person. That's what, according to other people. In my older sister, for instance, it's like her computer science skills and it's her dedication to XYZ. And so I think that, the only way that we can make this world better, we're taking resources from the world, we should put back more into the world, is to nurture our gifts and give them back to the world in a much greater way than we were able to receive them. And so it's just something that I think about every single day. What I do, I'm not necessarily doing for myself, even though, I have to take care of myself, I have to pay my bills and things like that. I'm really doing this for a much bigger purpose and something that's way bigger than just me.
Would it be fair to say that, hey, at some point, hey, I'm working at JP Morgan, I'm working at Pfizer, I'm pursuing the American dream, I want to make a lot of money. However, you have an inflection point where it's like, hey, I'm not really into this stuff as much as I thought. I really want to use my time on Earth to really kind of, impact change.
Yes.
Squad has raised capital. Mm-hmm. How much capital have you raised?
So we just raised a $3.1 million seed round.
Okay, nice. Congratulations. How many investors did you pitch to?
We pitched to, of the VCs, actually documented this, we pitched to 32 VCs.
32. Okay, got it. And then how many investors are in your cap table?
From that round, it was 3 investors.
Okay.
We had offers from more, but
How many more would you say?
We had offers for more than double that.
Okay.
But the thing about it is, too, it's one of those things where once you get an offer to lead, then everyone else wants to come on when they had kind of shelved you for a little bit.
Yeah. Who was your lead?
Harrison Metal. So they are a $70 million seed stage fund based in San Francisco. And they were the first institutional capital in brands like Heroku and Birchbox and Harry's. And so we have a very Silicon Valley heavy cap table from a VC perspective.
And they were comfortable with you being in New York or North Carolina?
No, so we're in New York City. So yeah, in fact, I just had my board meeting yesterday, and my board member was actually here. So they came to our offices, and I go to San Francisco a lot. So between them coming to New York and me going to San Francisco, my board members, even though, like I said, most of our investors and board are in Silicon Valley, like there's a great deal of connectivity between. And
was there any kind of requirement or pressure, like, hey, if you built a business in New York and we're here in the Valley, we would like to see you once a quarter? Or was there any guidance on that?
No, and the great thing, I'm really fortunate. Like between Harrison Metal, that's Michael Deering, Precursor Ventures, that's Charles Hudson, New Voices Fund with Richelieu Dennis. I'm very fortunate that, our biggest VC investors are very supportive and very empowering, but they're not dictators, right? They don't impose these like arbitrary rules for rules' sake. And, another thing too is that people say, well, do you need to move to San Francisco, because your investors are out there? It's like a mass exodus of talent from San Francisco right now in the Bay Area, and a lot of other markets are receiving a lot of that talent. And so New York has been a beneficiary of all the changes going on in the Bay Area, and the fact that a studio apartment is like $3,500 a month.
How much time did you spend practicing on your pitch, your live pitch to investors?
I probably practiced for a few weeks before, and practice is iterative, right? So it's like pitching it to somebody, getting feedback, pitching it again, and there's a lot of iterations in the deck. And so I did my first pitch beginning of February of this year, and we closed in mid-April. Did
you have friends to help you, or did you hire someone possibly to help you on getting your package up, your pitch?
Yeah, it was a combination of a few people. So my founder friends, so I think that, founders that have gone through this offer a great deal of very useful and helpful perspectives. But also, we had some kind of angel people that were just very big tech influencers, and, Precursor was even very instrumental in that as well. And so we had just people that were very involved with the company, both from an investment and just, being other founders.
When you targeted, it sounds like 32 firms, did you filter them based on kind of some of their communicated values at the firm in terms of, very embracing of women, a multicultural scope? How did you filter which investors to target?
Yeah, I actually did not really look at people's websites too much, because I find that whatever they put on their website is mostly like, it's not even, who cares? And the firm that actually led our round probably has the least information on their website. And so
not just websites, but like articles and kind of stuff online.
Not even as much. I think for me, for investors, keep in mind, when you bring an investor on, it's almost like getting married to somebody. You are contractually like in bed with that person for at least 8 to 10 years. And so I was most concerned with word of mouth. Like, how are these people, like their track record? I will look at that, how many of their seed stage companies make it to Series A, et cetera. But I was concerned with, this is a really great guy, because the reality is that Lightspeed or Sequoia or whoever may be the funder on paper, but you're actually attached to that partner. And so I was really concerned about the diligence of, the people I was taking money from, and if they were like decent people fundamentally.
Yeah. Did you pitch to some of those big elite names in terms of Sequoia, your Benchmark?
Yeah.
You pitched them?
I did pitch to a few of the elite names, and we did get offers from a few of the, elite later stage names to participate in the round. But here's the thing. So what happens is that a lot of like series A, B, C stage, fund. So I'll throw the Lightspeed in there. I'll throw the Sequoia. I'll throw the social capitals in there. What they do is they throw like $100,000, $250,000 checks to a ton of seed and C stage deals. And what happens is that when you go up for your Series A and someone looks at your cap table and they say, oh, Sequoia threw 250 in here. Why didn't they lead? Sometimes that ends up being an impediment to raise. And so I was very adamant about not having any Series A and strictly later stage investors on my cap table so that I can have the most objective experience going for the A.
What would you say to the entrepreneur? Entrepreneurs shared with me that a white investor was asking too many questions. And she didn't like the way she was treated in the pitch meeting in terms of the amount of questions, the detail that they were asking. And she made a big fuss in terms of in this particular community that the investor was racist. So the investor brought her into a meeting to pitch, but, she thought that the way she was treated, an example of racism or possibly discrimination based on her gender. But what I'm seeing out there is that a lot of the black entrepreneurs don't know what's market in terms of, hey, you pitch 32 investors. Some folks out there are pitching to 75, 100.
Yeah.
It's hard, period, right? It's hard to get money. But a lot of entrepreneurs, I believe, are very quick to say, hey, if investor doesn't bite, they're not really interested, they're racist. What are your thoughts kind of to that cultural element being in the black tech community?
I think we have to be careful about throwing the R word out there.
Yeah.
Not that some people aren't. And to be honest with you, I think some of it is unconscious bias. I find that there are not that many people where their intention is ill. And they're trying to be wrong, right? And they're trying to be unfair. And I think that it's just a little bit more exposure that is needed. And so one of my investors, you alluded to this earlier, one of my investors told me, he said, listen, despite the fact that, you built $1 billion product when you were on Wall Street, despite the fact that you have, really strong degrees and schools, you walk into a room, you are high risk. And it's your job to de-risk yourself.
When he says that you're high risk, he's just talking about in general, entrepreneurs are high risk? Or
No,
is he saying there's certain elements about you that's high risk?
He's saying me as a black woman walking into this pitch meeting and I'm like, I'm not the 22-year-old white guy who dropped out of Stanford, right?
Yeah.
I'm a chemistry major. I'm not like, so.
You're not matching the pattern.
I'm not matching the pattern.
Yeah.
So that, in Silicon Valley standard is high risk, right? And so I think two things. One is that, it's not necessarily healthy for us to, think that people are not treating us fairly, right? So I think that we should just continuously do the best that we can, because either way, like if we're bogged down in thinking that people aren't treating us fairly in a situation, we probably won't perform as well as than if we didn't have that in our head.
Yeah.
So I think that it's one of those things where it's like, I'm not saying it doesn't happen, but to a certain extent, like kind of ignore it, because
you can become intoxicated with the stuff where you can't be productive. You can't have a clear head in terms of being persistent and going out there like everybody else.
Right. Exactly. And so, and I think the second thing is that if you get the sense that an investor is not treating you fairly, kind of say forget it and walk away, because I don't want anyone on my cap table that I don't feel comfortable with. If someone is asking me questions because they assume that I don't have domain expertise and they're asking me questions in a condescending way or whatever the case is, whatever that made me feel uncomfortable, that's fine. I have the balls to get up and walk away and say, you know what, you're not the investor for me. And I have done that to people and I have said that to people, and it's okay.
Was there a meeting out of the 32 where you said, I don't like how you approached that in terms of you took it personal, where you're like, hey, this sounds kind of suspect. Did you have any kind of experience with like, would they ask someone else these questions or something like that?
It was less about how they asked me questions about the product and about the problem we were solving. It was more so them through their questions implying that I didn't necessarily fit the bill. Like maybe because I didn't study computer science or I hadn't, I'm a first time founder and not a fifth time founder with like 10 exits. And so I had a little bit of that, but to be honest with you, I actually can't even recall all the instances because I probably just ignored them and just kind of said, to hell with them.
What was your process to get the 32 meetings with investors? What are you doing? How are you hustling to get the meetings?
Yeah, so I think it's very iterative. One mistake I see a lot of founders making is treating this like a top of funnel exercise where they are just kind of getting a list of all VCs possible and just like shooting out cold emails. The reality is that there's an investment and an ROI in networking and being able to get that warm intro to somebody. Because just imagine like someone reaches out to you and says, "Hey, Jamarlin, can you take a look at this?" You're like, oh, okay, cool. That's my bro. You've been with him since like college, whatever. But someone who like cold emails you, we get emails from tons of people, like dozens and hundreds of people a day.
Yeah.
And investors do as well. And so I think that, how I approached my process was that we were fortunate to actually, we got a ton of validation behind us from who was on our cap table, but I had to hustle to get that, right? And so it was like one meeting led to one meeting, led to the next meeting, led to like this one particular person. And then that one particular person introduced me to like these other two people.
So investors were making
Exactly.
introductions.
Investors were making introductions, but I will say the stack rank order for the best introductions is first, this is a little bit more rare, but first, founders. So if there's a founder that, let's say, General Catalyst is back and General Catalyst loves that founder, get that founder to intro you to General Catalyst. The second is then investors. And then the third is kind of everyone else.
How do you get a meeting with Charles Hudson? What was your process there?
Specifically, Charles Hudson is a Twigo alum. So the Twigo Foundation is a finance fellowship for, minority MBA students, and Charles went to Stanford. I forget when he graduated, but I went to MIT. And so when I was thinking about leaving JP Morgan, I just mentioned it to the president of the Twigo Foundation, and she was like, you should talk to this guy who's a Twigo fellow who you might want to just talk to him before you quit your job.
Yeah.
And so that was actually how I initially got in contact with Charles. And I actually wasn't even pitching Charles. So Charles almost, he's a super great guy. But he was almost like an advisor to me, and on the, because we were both Twigo alums, and I was kind of getting into the space that he was familiar with. And then, maybe a year later, he became an investor officially. And now, like, we actually have a cadence of catching up monthly. But that's how I met him.
So it sounds like you had an advantage going in as a founder, where you can pull the Rolodex from your corporate America experience. It sounds like very instrumental. Would you say?
Yes and no. Like one of my biggest investors, one of my most influential investors, I met him because there's a guy that went to my church when I was like 10 years old that I hadn't seen in like 10 years, right, in North Carolina. He knew this guy from his business school. So, it wasn't just corporate America. It was people. One thing that my dad used to always say to me, he's like, everyone can add value to your life, but also don't be selfish about it. Think about how you can add value to other people. And I think that like the world is so interconnected that there are these kind of like random ways that you can get connected to people. And it's just, you have to hustle enough to kind of land those jewels and then kind of maximize on those jewels once you land them.
You mentioned you built a $1 billion product on Wall Street. Can you talk about that?
Yeah, so...
Because I've never met anybody who built a $1 billion product on Wall Street. Go ahead.
So I'll talk about what I can, because I don't know like what is public now versus what isn't. But I used to work in the kind of digital product management function for business banking for JP Morgan Chase. So that's a division of the bank that banks 5 million American small businesses. And so what I was doing is I was leading an initiative. It was called Small Business Next Gen. And Jamie talked about it in his shareholder letter a few years back. And what that initiative aimed to do was, at a very high level, make Chase, a much easier institution for businesses to bank with. When you think about all the financial needs of a business, deposit, lending, cash management, credit lines, credit cards. So my job was, kind of leading a big digital transformation of that business to deploy a number of products and a consolidated experience for them to actually, better serve, the 5 million American small businesses that Chase serves. And so that was the product that I was referring to.
What would you look back on based on experience in terms of running your company? Hey, I wish I knew this before I got into this game as a founder and CEO. Like, is there any kind of big thing over, the last year or two where you had to learn it? You had to be in the mix and like, man, I misprice the risk of something or industry changes. Is there any area where I wish I would have knew something before you kind of launch?
I don't think I have anything like that I can think of on the kind of business side. But the one thing I will say is actually more on the personal side. The one thing I wish I would have known a little bit more is the toll that being a founder can take on you personally.
Yeah.
And just the amount of time and effort that I invest in self-care is really critical to my performance as a founder, to my mental acuity. So I see my therapist once a week. I have a life coach that I see twice a month. I go to meditation class 2 to 4 times a week. And I also don't do nearly as many social things as I once did.
Yeah.
Right. My friend circle is super tight. And like, I talk to those 3 people all the time. And so I think that, I think being a founder is this really, really glorious, lauded thing in the public. But the reality is that it's actually very lonely. And there's a lot of sacrifice that goes with being a founder. And so I think that was the biggest lesson that I learned in being a full-time founder. All the other stuff, the product stuff, the pricing stuff, we've made a ton of mistakes. And as founders, you make mistakes all the time, every week. We've mispriced things. We've made mistakes and bad calls in the product before. But that just comes with the whole territory of just like learning. Testing. Yeah. But you should ask me this question in 10 years when I sell this for multiple billions of dollars.
Okay, got it. And so did you choose to communicate to your investors what your exit strategy was?
No.
Like, hey, I want to sell it.
No, I didn't.
Yeah.
Because to be honest with you, I'm not even thinking about an exit. I'm thinking about building the biggest business possible today with and figuring out how to accelerate our growth every day. That's my focus. And so it's funny. I would say out of those 32 VCs that we pitched to, maybe a quarter of them asked me about exit strategy.
Yeah.
The other ones didn't. And also the reality is that, do I want to run a public company? There's a lot that goes with that, right? I don't know. I kind of like my independence. I like focusing on building and growing stuff. That's my thing. And so, I may have a different answer for you in 3 years, with that round.
And what have been the biggest challenges with scaling it? You want to grow, you have capital. On the kind of business side, what has been the biggest challenge in kind of blowing up the platform?
I would say the biggest challenge is there are 2 things. One is on product and the second is on team. So on the product side, there's a focus that you need to have in order to scale. And I think that as the product evolves, because not the business anyone started, from Twitter to Facebook to whatever, is not the business that it is, 3 years, 4 years later. Yeah. And so the one thing that I'll say is that we've had to make some tough decisions on even saying, okay, this one customer that we had, that we really admired and adored and loved working with, that customer doesn't necessarily fit with the main use case of the product. They're doing all these edge cases and it's distracting for the team. And so we actually have to kind of graduate that customer to an alumni, right? Yeah. That's the euphemism for it. Not firing them, graduate them to alumni. And I think that, hard decisions around product and focus are just really difficult with scaling, because you have these two big opportunities and you're like, this one or that one, but the more you focus on A, the less you can focus on B, and vice versa. So I think that's one thing. And the second thing is team. So the team that gets you from, $0 to $1 million in revenue is probably not the same team that gets you from $10 million to $100 million in revenue. And so I think that kind of understanding the inflection points of the company and the team from a talent perspective, and where you need to flex up the talent and when, that's also been that's a very difficult part of scaling. And it's actually really hard for CEOs, like harder than you might imagine. Like I've had to have conversations with people and letting them go for that exact reason. Like your skill set was really great, for this, previous phase, but now we need something different. And it's actually like, it's difficult and it's emotional, and you get, you love these people, you respect these people, but you also have to do what's best for the business.
How many cities is the Squad platform in?
We're in about a dozen cities.
A dozen cities. And do you need human capital on the ground when you go into a city?
No, not necessarily. So there's a lot of a ton of self-generated content on the platform, and then self-created content, and then user-generated content. And then we also have an integration with like Eventbrite too. So we're able to, based on your zip code, pull in just different event recommendations to your various squads or communities where you are. But what I will say is that we have doubled down on focusing on New York and San Francisco. Those are our biggest markets, and is where most of our kind of brain power is going right now. Making sure we kind of get those markets saturated pretty well.
And what are the key KPIs for the organization in terms of growth?
So I would say it's a combination of, users. And so we have three types of users. We have your community creators. Those are the people that are creating communities. Very similar to like your meetup group creators or your Eventbrite event creators, right? And then you have your community leaders. So those are people that are liking stuff, engaging with stuff, signing up for stuff. And then you have your lurkers. So there's a social media rule called 1-9-90. 1% of your users will be creators, 9% of your users will probably be like the leaders / participants, and 90% would be lurkers. And so we actually have a much stronger creator group than that 1%. And so we're focused on kind of amplifying that group, doubling down on that. But as far as like, metrics specifically, it's user growth, but it's also continuing to grow that creator group. And it's also, other things like number of events per community, monthly active usage, things like that.
Richelieu Dennis, he created $100 million fund specifically for Black women, which is great. Some brothers have mentioned investors, they're happy, but they'll say, hey, why are the funds being created like gender specific in terms of the Black community is not at an investment scale to start kind of fragmenting into pots?
Yeah.
What are your thoughts on that in terms of the brothers who may have that point of view?
Yeah, the brothers who have that point of view are kind of coming from a place of privilege, right?
Yeah.
So to a certain extent.
Yeah.
But first, I would say on Richelieu, he's a phenomenal leader. And he has such a strong personal story. He's been raised by these, and he has like these amazing women around him, his mom, his wife, the women around him. And so he has a very unique perspective on kind of the resources that women and Black women need to succeed in this country. And so I would actually say, I look at even my business school class at MIT. I look at, a lot of the people that have gotten funded, in Silicon Valley. You take the top 5 most highly funded, well-funded Black men versus the top 5 highest funded Black women, and there is a huge discrepancy. Black men, yes, we as Black people, we do have access issues, but I think that it's more pronounced, to be honest with you, with Black women.
Yeah.
I can tell, like, there are even some investors who they'll see me and they don't even know how to like interact with me. They're like, do I shake her hand? Do I like what, like
give her a pound,
right,
give her
like,
a fist bump,
or do I say like, what's up, sister? Like, they're so awkward. And so we're as a result, boxed out a lot of conversations that Black men can get into easily. And I don't want to like oversimplify, but to the nerdy white guy who's writing the check, the Black guy is kind of cool. They're like, ooh, I listen to Nas too. I bought my first Jay-Z ticket. And so, but the Black women they don't have that kind of, that, coolness factor that the Black men do. And so I've seen firsthand, the discrepancy in, funding for Black men versus Black women. And the one thing I'll also just really add very quickly is that I was telling one of my advisors who was also on Wall Street, I said, when I was on Wall Street, I felt like I was more Black than I was a woman. So I identified with being Black way more than I identified. I didn't go to any women's events or anything. And the reason was because my experience was more similar to that of the Black man on Wall Street, the different issues that we would have. But as a founder, I actually identify as being female more than identify being Black, because I see the divide of my experience being more similar to the white woman than a Black man.
Explain that.
So really quickly on Wall Street, a lot of the kind of issues around promotion, credibility, lack of opportunity, those white women didn't necessarily have those issues the way that I saw my fellow brothers have that same issue on the street. Right. But when I moved to kind of the VC backed founder community, the one thing that I saw was women struggle really hard to get into the room, to get access. Whereas the Black man, especially those that come from like the type of schools that I came from, they had an easier time. I'm not saying they definitively have an easier time getting funded, but they had an easier time getting access.
What does the data say about white women getting funded and Black men? At least the way I'm thinking about it is that in general, the white investor or institution is going to treat the white woman 10 times better on average with the same credentials than a Black man. What is the? Do you know what the?
I don't know what the. I don't know what the data says.
When you say that, you identify more with white women than the Black men,
specifically in raising VC capital. Yes,
and raising VC capital. Talk a little bit more about that. I'm trying to wrap my hand around that. Yeah.
So it's a little bit of a controversial view. I get it, but it's just my personal experience. Yeah. So when I am having more conversations, it's just a pattern thing, right? And so, like I said, from a pattern perspective, a lot of this people that were having similar experiences to me on Wall Street were the Black men and not the white women.
Yeah.
But from a VC perspective, a lot of the things that are said to us are kind of issues that we have to deal with, right? When I talk to, my fellow female founders who are white, I see more similarities with their experience and mine versus that of, a Black man. I'm not gonna name any names, but there's, kind of a top 3 firm I know in Silicon Valley. Everyone listening knows this. You know this firm. But one of my homeboys does investments for, with a lot of celebrities. And he was walking by, the office of one of the partners. And with like one of his friends who was a celebrity. And it was like, oh, what's up? Like, blah, blah, blah. Oh, come in and have a seat. And then next thing you know, by the end of the conversation that day, he walked out with a $9 million check. That would never happen to a woman. White, Black, purple, green.
At that firm. And it's a top 3 firm. So my point is that, like, a lot of these... I know what firm you're talking about.
When you're... I said I'm not going to name no names. Yeah. But a lot of these, circles that are very kind of, like, liberal acting or whatever, they embrace the Black man way more than they embrace the Black woman.
But with that specific firm... and they're so late to the game in terms of having a female partner. I mean, they may have 50 partners and no woman.
Right.
But I believe they recently had their first female partner, and they've been in the game for a bit. So I get like, hey, that firm is very.
It's not just that firm though. I see dudes cultivating deals or like in much easier and casual forms than women are able to. And keep in mind, like the way that you can break bread with Bob and Lou and dap it up and like drink kind of heavily.
The social aspect
helps men a lot.
Yeah.
Whereas like I'm going to be buttoned up. I ain't drinking more than a drink or two.
Yeah.
You know, and like that, it is what it is. And maybe they're not as comfortable. Maybe like, you know, they want to dap it up with like Terrence, right?
Yeah.
But at the end of the day, there is a gender dynamic, you know, that impacts the way that deals are created kind of in this world.
Yeah, it sounds a big weighting of your view is the comfort factor in terms of folks getting comfortable. Going back to your controversial point of view, some people will say, hey, there's not a lot of black investors out there, but you have a brother in your cap table, Richelieu. You have Charles Hudson in your cap table. But, you know, when you say that raising capital, you relate more with the white woman than the black man.
I want to correct because I don't want, I want this to be quoted the right way. I want to say it again for the people in the back. Yeah. I said that my experience, and the patterns in my experience have been more similar to women in general. Yeah. And so you like white women happen to be the majority there, women in general, than it is to men or black men. So I don't relate more.
Okay, got it. What would you say that our people, black people, that when we use an ambiguous diversity concept, this is about diversity. This is about, you know, we need more diversity. We need more diversity. So everyone uses this term diversity. However, the data is suggesting that the real benefits of diversity is going to be white women. As you know, 52% of white women in the United States voted for
Trump.
MAGA. And in my view, that when our people who have been through slavery and we have a unique history in the United States in terms of hostility, that when we use diversity promiscuously to describe a whole bunch of things, is that strategically, and as you know, diversity, that's a political issue, right? There's some groups that are going to get bigger gains than other groups. But when we use the ambiguous diversity umbrella, black people in America, we end up losing because we don't have the proximity to power as white women. And so when we are like banging and championing diversity, when everything is kind of processed on the back end, it's really you're pushing.
Who's banging and championing diversity? Are you saying that because of the New Voices Fund?
No, nothing related to Richelieu. I think it's black. Like he's not saying, "Hey, this is a diversity." I'm not aware.
He's all about
black
access.
Women. I'm calling it out, and I love that.
Yeah.
What I'm saying is that I can put 10 diversity activists, and it could be investors, activists, executives. Let's say, "Hey, I want to promote diversity." But when they say that, I feel like it's really pushing unintentionally an agenda for the advancement of white women, just based on how we're structured here in the United States.
So I think that it really depends on like the environment, right? I had this conversation super openly with executives at my old firms and this is one of the reasons I did not have similar patterns of experiences to white women when I was in corporate America, was because when diversity programs were implemented, specifically women's programs were implemented, the box was checked and all of their goals were achieved without the inclusion of any other woman but the white woman. And so I never felt that the women conversation included me. I never felt that it did. And so I think that was also a part of why my experience was not similar to that of the white woman in corporate America. But I think it's a little different, like kind of in the VC founder world. I don't think that people, I don't hear the diversity conversation talked about in the same type of way. I think it's really more about like objectively looking at access, right? And who has the greatest level of access. And I would say that Black women definitely have the lowest level of access.
So Black women, it sounds like, could be hurt the most if we spend energy arguing for everybody, like all the different groups in diversity. It doesn't matter if you're rich, poor, whatever. We're arguing for a broad diversity, but based on the gender and racial dynamics here in the United States, it seems like the Black woman would lose the most in terms of if we don't call out what needs to happen for Black people in general or Black women specifically.
Right. Didn't Malcolm X say something like that? It's like the most kind of disrespected and kind of underrated person in the U.S. is the Black woman.
Yeah, and so for the audience, I definitely believe that we have to be careful in using diversity in an ambiguous way. And if we're really talking about lifting our people up, that it's okay to be specific. The problem is specific. And so let's go back to Richelieu Dennis. So he sells part of his company to Bain Capital. And that's another thing that folks need to be aware of, that you don't have to sell your whole company. I think Richelieu did something very smart where he sold a chunk of his company to tap liquidity. He used capital with the partner, Bain Capital, and then he sold it. So there was 2 sales with his process. And so, when I see certain things in the media, it's like white people, they're passionate about diversity. They want to see more Black founders get capital. And so it starts to take on a smell that kind of white folks are in the diversity tech scene saving people, right? We want to go and help the situation. And so you don't see as much as our people coming in with big wallets, big checks, organization to save ourselves. And so why I think Richelieu's new fund is so important is I believe that we have to own our rise for the most part. Did you share that point of view?
Definitely. Yeah. Definitely. And like I said, the one thing that, Richelieu, besides being an amazing person and believer in the Black community and, what we contribute to this world, I think Richelieu also saw, like I said, a huge problem with access, and the fact that Black women just have a much harder time getting into these rooms, getting into, access to funders. And so that was, I'm glad he kind of is pounding his fist against the table. But the one thing I will also say about white people in particular is that I have found in my experience, again, just my experience, that the white people that are the most pro-diversity are the ones who are not that loud about it. There are a lot of people that are always talking about it. They're tweeting about it, but
making money from it.
But where are your checks? So I'm thinking about 3 of my backers in particular. One just sold his company for $2 billion. And he was like, he just writes me checks. Like he was just writing me checks, and he's written more checks to Black women than any other of the white people that are, loud about it. Second one was like an early employee at Netscape. Another one was like an early employee at Intuit. And again, I'm not the only Black woman that they've supported. And these are very Silicon Valley tech guys. And so I would say on that side, people should be cognizant of like who's attracting, don't be attracted to all the noise, follow the dollars. But, on Richelieu's side too, we do need people in our community like Rich. And what Rich says to us, his founders, is Rich says like, listen, this isn't like a one-stop shop type of thing. Like you guys go and become multimillionaires and multi-billionaires, and then you do, for other people what I'm doing for you. He's trying to kick off that cycle, which I think is just super commendable.
Where can people find you online?
So I am most active on Twitter and Instagram, and I am at Isa D. Watson, ISA D as in Diane, Watson, Watson. So those are my both of my IG and my Twitter handles.
Thanks for coming on the show. Let's go.
Thank you for having me.
Thanks everybody for listening to Go. You could check me out at Jamarlin Martin on Twitter, and also come check us out at Moguldom.com. That's Moguldom.com. Be sure to subscribe to our daily newsletter. You can get the latest information on crypto, tech, economic empowerment, and politics. Let's go.